Welcome to the channel. My name's Jodie Knight. You can find me over on eToro, and you can find the link for my live portfolio there in the description below. I finally think I figured out video. I think what was causing the issue was TradingView. For some reason, it just was hogging all of my memory. So now I have to record all the audio and video and then add the arrows to what I'm pointing on after. I think I need to get a more powerful machine, but don't really want to because I've not long had this one. But anyway, let's just have a quick look at what we're going to talk about today. It's PayPal Thursday, which is my favorite day, especially with how price action is going. I'm very excited that we've finally got the gap fill. I feel like I've been waiting for years and years for it. It probably has been a few years, to be fair. So other than that, we'll do the weekly chart and the daily, and then we'll look at the options interest and see what's happening with that. I might touch a little bit on a couple of things that are happening over the next few days because it's going to be a very interesting few days for the market. But let's just hop straight into it. So right out the gate on the daily for PayPal, I get very excited. It's had a heck of a move the last few weeks. It's up 26% from its double bottom low there. It has filled the gap that I've been waiting donkey's years for it to fill, and then it's had a little bit of a rejection and pullback here, although not as big as I was expecting. It's not a surprise that we've had a pullback here. It would have been excellent to get above it and then turn it straight into support, but I think given the amount of gas that we've used to get to this position, it's completely warranted. I wouldn't be alarmed by this pullback at all. If you're alarmed by this, you probably shouldn't be investing in many stocks at all. But other than that, on the daily, RSI is getting a little overheated. Historically, this has always been an area to pull back in, at least in the recent future. But then the MACDX Plus as well, that is expanding, and institutions are absolutely crushing it. They're wanting to load the boat on this. I think the news with the Adyen partnerships really built some confidence out in this one. I think we're going to be seeing a lot more partnerships come to light as well. And the flow's just been incredible. This golden bar here was a great warning. Traditionally, not always super good, but typically when you get 3 golden bars like that, it's going to happen. So I'm very happy about that. So for the weekly chart here, come on, you can't look at this and not be bullish now. This is looking like we're just getting to go time here. It looks like the trend is reversing. We have, for the first real time, a very distinguished higher high, and I am totally here for it. But other than that, we've had this little wick here. I do expect us to get back above this if we have some good data or some good speech from JP. Obviously, we had that god-awful jobs revision, which wasn't that much of a surprise. We've been getting huge revisions, and it was kind of expected. To some degree, it was priced in, but I think the market could be moved quite a bit considering what JP says. If he's dovish, I think we're going to get rolling, but I'm not super confident he's going to be outright and say the data is in our favor now. I don't think he will want to set the races off. But you never know. Sometimes that man is unpredictable. After all, inflation is transitory. But then, other than that, on this chart, RSI still got a little bit of wriggle room, but I'd still prefer that to cool off a little bit. Institutions really coming in, and those moving averages for the MACDX Plus are starting to want to come together. That would be amazing. If we get a little pullback in price here and cool this off, we definitely should be getting a golden cross on the next push up, and flows are looking good as well here. The only other thing to point out really was I did change the format of my background for showing charts. I had a lot of lines on there before, and I think it was making the peak volumes difficult for people to see. So if this looks better, please let me know, or if you'd prefer me to go back to the old style, let me know also. On to price targets, which I know everyone always gets excited to hear. Still, my fair value is around about $100. It's a little bit over, not worth haggling over pennies. It's quite a way off the all-time high, but I don't think I will be anywhere near this stock once it gets to that. I mean, if it gets to that, that would be quite ambitious. I think it was way overhyped back then. And another thing to consider is the market is so much more saturated than it was back then. PayPal kind of had the run of things, but it's now got to split that pie with all its competitors. So always bear that in mind. I've literally just noticed my dog is in the background. Well, one of them. Asleep as usual, not being sportive. Other than that, that's it. Let's take a look at options. Looking at the rest of the week's open options interest. Granted, it's Thursday, so not too much exciting happening. The expected move here is minuscule. If we look at that, it's just a few dollars range. And we're pretty much at resistance. So, like I said, when we were looking at the daily chart, it's pretty expected that we'll get a little pullback here. It's going to be a bit of a tough area to break out of, so we'll hesitate and chop a little bit. But if we move on to look at the week after, so we've got increasing resistance here up to $75. So again, that's going to be a pretty heavy level to break if we can kind of just grind above it. But that would get us over the gap fill. So that'd be a nice area to chop around in. Can't hate that. For the January 2025 open options interest, we can see the topside resistance is still 140, 145. That's insane for that amount of time. I don't see that happening, just to be clear. More realistic area is this 90, 99, 98 kind of area. But the market expected move is probably getting it to about 87, I think that says. So reasonable. I'll be very happy if we get around there by January 2025. I don't necessarily see that as happening, being as this has been a really slow and painful turnaround, but you never know. The ads business could absolutely destroy it and we could smash higher. 2026 hasn't changed much either recently. The 95 still being the key resistance area there. I think what's happened with the disparity between the 2025 and the 2026 open options interest is probably some legacy positions where they thought the stock would recover much faster than it actually has. And they've just kind of left them there to see if they can recoup some of that money. But they don't seem to be coming out of it. So maybe they will close at some point. Who knows? We'll see. Just taking a quick little peek at the data that's coming out today. We've got more jobs data. Yay. So we'll see how that goes. We've got some PMI stuff, manufacturing. Again, manufacturing is not the be all and end all of the economy right now. It's mainly going to be focused on services. So I'd pay more attention to those numbers. Other than that, though, the Jackson Hole Symposium later today. Brace yourself. We'll see how that goes. I will be online for this one and I will be listening, so I'll let you know if there's anything interesting worth noting on that one. But mainly the reactions are going to be quick, so by the time I posted anything, the market will have already made its move. So if you want to be trading that, you need to be listening to it live. Personally, if you're a newer trader, I think it's safer for you to just hands off at the moment, just have faith in what you're currently holding, and if we get a dip, buy the dip. I also wanted to touch a little bit on this US daily trueflation rate here. It's now at 1.35% compared to the government's 2.9%, so that's a hell of a difference. I do find the government data to be a little bit lagging, and this trueflation data is a great indicator of where things are going because it's showing much more current data from a lot more data points. I think when rates do come down as well, this will continue to drop as the housing market unlocks. The supply and demand issue there is really jacking up prices, and once that starts to relax a little bit, we'll see that help out as well. So I don't think a cut now is necessarily a bad thing. I think a cut will help stimulate some stuff that will also contribute to this coming down. The main concern now, I think, is the jobs numbers, and the entire market now is looking at how bad it is. And I think it's been BS'd for a while, 6 months to a year. I think these numbers have been fudged. I think to some degree, immigration is really having an impact here as well. The economy just can't support that amount of people coming in, and that's really starting to affect things. So I think now the Fed's dual mandate has shifted. That's it from me. I'm off to enjoy the rest of my day. If you like this video, give me a like, share with your buddies, and subscribe to my channel. I'll be posting again tomorrow. So hopefully I'll see you then.